Hi everyone, welcome to a brand new episode. I'm Marcus and today we're looking at Intel, ticker symbol INTC. We'll cover the income statement, balance sheet, cash flow, key figures, our key feature, and the technical aspect of the stock. Should we be buying the stock? Well, let's take a look. As I mentioned, we're looking at Intel, ticker symbol INTC. If we go down to the screen, we can see that there are traded on NASDAQ and are in the manufacturing sector. Their market capitalization coming in $111 billion and their revenues at $73.4 billion. PE ratio is at 5.8. That is great. Profit margin at 26%. That is amazing. Price to sales ratio is at 1.6. 1.5. That is great. And price to book value is at 1.1. I'm liking what I'm seeing right here. And they do pay a dividend of $1.42, which is amazing because I like those recurrent income. And effective return at 5.3%. That is just amazing. That is great. Return on equity coming in at 20%. That is acceptable. But return on assets is at 4.9. That is a bit low. So if we look at the chart, we can see that they are traded at $26 per share. And if we go down to the moving average, we can see that we are below the 50 and the 200-day moving average. Basically, what it's telling us is that we might see the stock price decline. And we have seen the stock price move within a negative trend channel for quite some time. And I believe it will continue to do so. But we'll take a closer look at the technical aspect further down. But let's head over to the income statement. What we are interested here is that the total revenue went from $64.2 billion up to $78.2 billion, and these numbers have been improving year by year. That is a plus. Gross profit went from $39 billion up to $43.8 billion, and these numbers have been improving. We fell off a bit in 2019, but have since then better and better numbers. That is great. Now, the net income went from $9.6 billion up to $19.9 billion, and these numbers have been improving, and we can see here lately since 2019, we have seen lower and lower numbers. This is negative. Now let's head over to the to the balance sheet. What we're interested here is that the current assets versus the current liabilities, and we can see there is a huge difference between the current assets and the current liabilities, and that is a plus. Basically, if the company were to convert these assets to cash, they are able to pay off the current liabilities and still have a lot of capital left on the table, and that is just great. But they are far from being able to pay off their total liabilities, which have gone from 53.6 billion up to 73 billion, and these numbers just continues to increase year by year. They reduced a bit in 2018, but overall trend is negative. Outstanding shares went from 4.7 billion shares down to 4.1 billion shares, and these numbers have been dropping for over the last 5 years, and that is amazing. Basically, what is happening here is that the company is doing buybacks. They're buying back shares, and therefore your share of the company, if you were to own the company, your share of the company would grow because there are fewer and fewer available shares out there, and this is amazing. That is a plus. Now, if we go over to the cash flow, what we're interested here is that the operating cash flow versus the capital expenditure, and we can see there's a huge difference between the operating cash flow and the capital expenditure, and that is amazing. That is a plus. And we can see that the operating cash flow went from $22 billion and have been growing year by year. We fell off a bit in 2021, but overall trend is positive. And the capital expenditure went from 11.8 up to $18.7 billion, and these numbers have been improving. Fell off a bit, but overall trend is positive. Basically, the operating cash flow is improving year by year, and the companies continue to invest in their business. That is a plus. I like it. Now let's head over to key figures, and what we can see here is that the earnings per share, let me move around. So we can see that the earnings per share went from $2 per share up to $4.8 per share, and these numbers have been improving year by year. We fell off in 2021, but overall trend is positive. Revenue per share went from $13.7 per share up to $19.2 per share, and these numbers have been improving year by year. That is a plus. Equity per share went from $14.8 per share up to $23.4, and these numbers have been improving I like it. That is a plus. Dividend per share went from $1 up to $1.39, and these numbers have been improving. That is a plus. Basically, they are increasing their dividends, and I like it because I like those recurrent income. Also, the fact that the income is growing year by year. That is amazing. Dividend payout share 52%, 26, 26, 26, 28. This is a plus because I like companies that pays out less than 60% of their capital, because I want some of the capital to remain in the business for investments, for acquisitions, or just overall strengthening the finances during uncertainty. So this is great. Now let's see here. Gross margin went from 60.8% down to 56%. We can see here these numbers did improve, but have since for the last 3 years seen lower and lower numbers. This is negative. So what is happening here is that the cost of goods sold is increasing, and the company needs to find ways to improve those numbers and become more efficient. But also, these are a huge number. These are great numbers, but at the same time, we need to compare these numbers across the industry and see how is Intel doing compared to their competitors. By seeing that these numbers are dropping, that is negative. Operating margin went from 31.6% down to 27.7%, and they improved a bit, but have since seen lower and lower numbers. This is negative. They need to reduce their operating costs. Profit margin went from 14.9% up to 25.4%. We can see that these numbers improved, but had of lately seen lower and lower numbers. The only reason I'm giving it a plus is because 2021 numbers are greater than what we started off with. But seeing that these numbers are dropping, that is negative. Return on equity went from 13.7% up to 20.8%. These numbers have been improving, but has of lately seen lower and lower numbers. That is negative. Return on assets went from 7.7% up to 11.8%, and these numbers have been improving and started falling. Well, they have been falling for the last 3 years. That is negative. Solidity. Well, solidity basically tells you about a company's financial strength for the long term. We can see we went from 56.5% up to 56.6. Not a huge change, but we're seeing that they started improving and they started falling a couple of years, but then they recovered in 2021. So that is a plus. Balance sheet liquidity, same thing as solidity, but here it looks at the financial strength for the short term. We went from 0.7 up to 1.2, and these numbers have been improving year by year. That is a plus. Debt ratio went from 77 and landed at 77. So we fell off, improved, and fell off. But overall trend is positive. So that I'll have to give it to them. So guys, we have gone through the income statement, balance sheet, cash flow, key figures. Now over to our key feature, which is the stock analyzer. Basically, it gives you a simplified, holistic overview of the company's performance, and it saves you a lot of time. If you want to dig through the numbers, you can dig through the numbers or have the software do the heavy lifting for you. If we look at the screen, we can see that the PE ratio is below 20, which is plus. They do pay a dividend, which is a plus, and a dividend payout share is less than 60%. That is a plus. And the dividends increased over the past 5 years. That is a plus. And the numbers of outstanding shares have been dropping. That is a plus. Revenue increased over the past 5 years, plus. Profit margin above 15%. That is a plus. Profit did decrease over the past 5 years. That is negative. And current assets are greater than the current liabilities. That is a plus. Solidity increased over the past 5 years. That is a plus. And balance sheet liquidity increased over the past 5 years, plus debt equity ratio improved over the past 5 years. That is a plus. And the total liabilities grew over the past 5 years. That is negative. Guys, as you can tell, it gives you a simplified, holistic overview of the company's performance in a simple manner, and it saves you a lot of time. If you want to dig through the numbers, you can dig through the numbers or have the software do the heavy lifting for you. And you can have this software along with everything we're going through, plus access to our discussion forum where you'll be able to chat with me along with other members for only $10 per month. So make sure to head over to commerce.sc and become a member today, okay? Thank you. But now let's take a look at the technical aspect of the stock. So here we have the chart. As you guys can tell, we have more or less since 2017 been consolidating, as you can see here. But we can also see clearly that there are key areas around here. As you guys can tell, every time we have reached these levels, the buyers come back in and try to push the stock price even higher. And as of October 2020, we saw the stock price increase before hitting a ceiling, a major resistance level here, and then the bears came in and pushed the price further down. But we can see that we have been moving within a negative trend channel for quite some time before hitting those levels, key levels at $44 per share, and the buyers came back in and pushed the price even higher before hitting the resistance level. We can see that we went down to the support line here before the buyers came back in and tried to push the price back within up towards the key levels, which is now a resistance level, and that didn't make it, and we saw the stock price now started declining more and more. So is this a bottom? I don't think this is a bottom if we consider what everything that's going on with the economy. We're seeing central banks all around the world increasing interest rates in order to dampen demand and reduce the economic activities. So if you listen to the Fed or other central banks, basically we are anticipating more increases further down, and basically we believe that we'll continue to see some economic growth during 2020, but in 2023 we might see a much slower economic growth, and therefore that will increase unemployment rate. More people, the labor market participation will drop, and therefore it will affect the overall economy in order to bring the inflation back to their target level around 2%. So I don't think that we are seeing a bottom right now, but at the same time, Intel is a great company, and there is a huge market out there as more and more product and services and things are being digitalized. So their service is needed, their product is needed, and therefore I believe there is a future for Intel. But at the same time, they have their challenges. They need to find ways to improve those profit margins. They need to reduce the cost of goods sold, reduce their operating costs in order to bring their financials back in order. But overall trend, we are seeing that the numbers are dropping. But if you are for the long term, which I am, I believe in the company, but at the moment I'm standing on the sideline and just watching the stock price continue to decline. But I will in the future start adding some shares to my portfolio. So that's my take on Intel. What's your take on Intel? I would like to hear your thoughts and ideas in the comment sections below, and I truly hope you have enjoyed this episode. If you have, please give me a thumbs up, comment, subscribe, and if you haven't subscribed yet, please make sure to do that. We are almost at 300 subscribers, guys. Help me reach 300 subscribers, and let's build a community of people that wants to learn and share knowledge and just grow together. Again, I hope you have enjoyed this episode, and until next time, guys, take care. Bye-bye.